Hello everybody. In this video, I'm going to give an update on my portfolio. Right now, my portfolio is worth $72,365.17. On Friday, I was up $4,047.51, and after hours, I was down $798.16. Here are my options. I'm selling Amazon $170 covered calls, expiring on February 16th, Disney $110 covered calls, expiring on February 16th, and LUV $30 covered calls, expiring February 16th. Something that changed is that I'm no longer selling SoFi covered calls. I still own the shares, but I got rid of my covered call position for SoFi. I do plan to do them later on, but for now I don't have them. For my stocks, I have Amazon, Disney, LUV, and SoFi. Now the big news for me was with Amazon. As you can see here, they were up 7.86% on Friday. They reported their earnings and it went pretty well. If I scroll down here, earnings, the estimated was 74 cents per share and they reported $1 per share. So they beat estimates. Here's an article talking about it. Amazon stock climbs on revenue gains and ads growth. Amazon, ticker symbol AMZN, reported fourth quarter earnings that beat analyst expectations Thursday and delivered an optimistic outlook for the months ahead. The stock climbed more than 6% in early trading on Friday. Net sales came in at nearly $170 billion versus expectations of $166.2 billion. That's 14% higher than the almost $150 billion the company generated during the same period in the prior year. The outlook for the current quarter also surpassed forecasts, with the company expecting an upper range of $143.5 billion. So that's good. They beat estimates and they're making 14% higher compared to the same thing last year. This quarter 4 was a record-breaking holiday shopping season and closed out a robust 2023 for Amazon. Amazon's muscular earnings report and subsequent investor response followed more critical receptions to some of its big tech siblings, which also largely beat estimates. Here are some of Amazon's most significant metrics compared to what Wall Street was expecting in the company's fiscal fourth quarter, according to data from Bloomberg. Revenue was $169.9 billion versus $166.2 billion expected, and a year ago, it was $149.2 billion in quarter 4 of 2022. Adjusted earnings per share, $1 versus 78 cents expected, and it was 3 cents in quarter 4 of 2022. Amazon Web Services, $24.2 billion versus $24.22 billion expected. $21.4 billion in quarter 4 of 2022, so a year ago. So they made more money from Amazon Web Services compared to quarter 4 a year ago. Advertising, $14.7 billion versus $14.2 billion expected. And a year ago, $11.6 billion in quarter 4 of 2022. So it looks like they're making more money compared to the same quarter in 2022, and they also beat estimates for a good majority of them, except for the web services, 24.20 versus 24.22, but that's not a large gap. Everything else was a beat. Adjusted earnings per share was beat expectations, revenue, and advertising. On Thursday, the company also unveiled a new shopping assistant dubbed Rufus, trained on Amazon's product catalog and broader information from the web. The generative AI-powered tool can answer customer questions and recommend products on the Amazon mobile app. Alright, so they have like an AI assistant named Rufus that can help you with your Amazon shopping. Amazon said a small subset of customers will initially be able to use the chatbot, and then the company will widen its release to more users in the US. Amazon's results arrived just weeks after the company eliminated several hundred roles across Prime Video and MGM Studios and announced a major reduction in staff at its video game live streaming platform Twitch, laying off more than 500 people. Staff cuts across tech highlight the sector's painful climb down from an era of rapid expansion, as companies are still resizing and retreating from ambitious investments made during the early stages of the pandemic. Yeah, and this is nothing that's specific to Twitch. I've seen across the entire sector. I think a lot of companies, as it says here, made ambitious investments, threw a lot of money at just hiring a whole bunch of people, and now they're laying them off and resizing. So that's what's been happening lately in tech. Executives said during the earnings call that it is still early days for deployment of AI products, but that revenues are accelerating rapidly as customers express interest in developing AI tools. If anybody, Amazon has I believe they have the tools necessary to invest into AI products. And they're doing that already with the announcement of Rufus, the AI assistant, but I think they could expand further beyond that. So we'll see. CEO Andy Jassy said that every consumer business at Amazon is developing multiple generative AI applications. The company sees the potential for AI development to generate tens of billions of dollars for its cloud business. AI tools require huge amounts of data and processing power to train and run large language models and their applications, relying on cloud providers to provide vital infrastructure. Amazon said that capital expenditures will increase in 2024, in large part due to the expansion of its AI operations. Cloud rivals Microsoft and Alphabet both reported double-digit capex increases earlier this week. Amazon began displaying ads on its streaming service, Prime Video, in recent days. Executives declined to share estimates on the scale of the new ads operation, but noted that expanding advertising on its streaming properties is an important part of its business model to continue investing in content. They anticipate that Prime Video will not present a heavy ad load for audiences compared to network TV and other services. Earlier this week, Amazon streaming service Prime Video began displaying ads alongside movies and shows as the default option for users, who can pay extra for an ad-free version. Analysts have noted the significant potential for ad growth given the massive scale of Amazon's built-in audience. In September, the company launched its AI service dubbed Amazon Bedrock, which allowed customers to build generative AI applications through existing models offered by Anthropic, Stability AI, and Amazon itself. That same month, Amazon also said it would invest up to $4 billion in the AI startup Anthropic as the biggest players in tech scramble for positioning in what they see as the coming age of the technology. Amazon Web Services, the biggest player in the cloud industry, claims about 30% of the market share, followed by Microsoft Azure and Google Cloud. The trio collectively account for roughly 2/3 of the market. Okay, and here's a little chart showing how Amazon made money last quarter. Online stores, third-party sellers, Amazon Web Services, ad services, subscriptions, physical stores, and other. So obviously, most of the money comes from their online stores. Me personally, I just bought something from Amazon like 2 days ago, so I use it pretty often. And whenever I talk with people about buying things online and whatnot, most of the time they get their things from Amazon if they were to order it online. I know some other places have popped up recently, like Temu. I bought some stuff on Temu before, but I've had sort of mixed results from there. Amazon, generally speaking, the ones with good reviews, when I get it, it actually turns out to be good products, so I trust it. And that's pretty much it. So yeah, it sounds like they had a really good quarter, made more money compared to 2022 quarter 4, as well as beating estimates, and that's why they popped. And moving forward, it sounds like they're investing a lot into AI. Now, do I think that... I wonder what you can ask if Amazon were to make like some sort of AI chatbot. I mean, of course, it could help you buy products on Amazon if you were to ask, but if, yeah, I wonder if they're going to expand that to just, you know, maybe creating images. Like, I know Microsoft has the Bing AI image creator. I don't know if Amazon's going to do something like that, but like an AI image creator, I feel like a lot of people would use that. Yeah, I don't know. We'll see what happens. But yeah, it sounds like they had a great fourth quarter, and as a result, the share price increased by over $7. Sorry, not over $7, 7%. Now, for the year so far, year to date, 2024, I've made about $694.71. I did make a lot of money after the SoFi earnings pop, but then that quickly went back down again. As you can see, SoFi after its earnings went all the way up to $9.31, but now it's back down to $7.80 again. So there's a pop up, but then it went right back down. Now, do I still believe in SoFi as a company? Of course. They reported a really good quarter, as well as explaining what they're going to be doing in the future to grow from 2 cents per share to 7 or 8 cents per share in terms of earnings. So we'll see. But that's it for me. And if anything else crazy happens, I'll let you guys know. The next thing that's coming up is Disney. Now, right now, Disney's at $97.01, and their earnings are coming up on the 7th, I believe. Wait, where is it? Yeah. Earnings available February 7th after hours. The estimate is 92 cents per share, so we'll see if they beat or not. And what they say about what they're going to do in the future to grow. A lot of people have been very critical of the movies and the content they've been putting out lately. The Wish movie, for example, a lot of people had criticisms about that. Yeah. In order for Disney to really come back, they have to put out good content that people are going to love. And I feel like a lot of Disney lovers, they love the old stuff. Little Mermaid, Snow White, you know, old Disney content. But in order to grow, I think they need to put out new things that are going to captivate audiences. Alright, that's it for me. That's it for this portfolio update. I hope you guys had a good time watching. I'll see you guys next time. Bye.